And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to the show. Of course, it's election day. Asterisk, asterisk, exclamation point, asterisk. Yeah, look, this is the long-awaited day, and finally here. Thank goodness we can get this behind us, and we can start to move forward with, what's going to happen next. We've got the Federal Reserve tomorrow. Of course, we'll find out what they're going to do on rate cuts. But it's interesting because I've just gotten so many emails and comments like, "This is the most important election ever." Every election's important. Every election is important, but I will remind you, while this one seems like the most important election ever, that was the same thing they said in 2020. They said it back in 2016. They said it back in 2012, back in 2008. It was the most important election ever. It was a vote on democracy, all these type of things. So none of this is new, right? This is the way it always is. We have lots of rhetoric around the election, and it makes everybody very tense, very nervous. I've gotten a lot of emails from people going, "I'm just not doing anything until after the election. I don't know what's going to happen." And yeah, there's certainly a lot of concern. After the last election, we had lots of, people that were upset about the outcome of the election in 2020 and 2016. You had lots of people very upset after the election, lots of tension. So again, these elections are very important. You vote for what you get, right? So, if you want a better outcome in the economy, vote for policies and vote for the people that are going to promote those policies. This isn't a personality contest. I'll tell you something. If I'm going to vote for somebody, I want to vote for the person that has the biggest ego on the planet. And I'll tell you why. Guys that are narcissists, or ladies, it doesn't matter, women or men, but people in general that are narcissist, egotistical, etc., you know what their one factor is? They can't fail. Their egos are so big, they cannot allow themselves to fail. So again, the thing you want to vote for is the policy. Don't worry about the popularity contest. That's for high school prom queens, okay? This is about policy, and you want to vote for the policies that are going to generate the best outcome for you. You get the government you vote for. So, make your choice wisely. Whatever you think is the best policy for you, I'm not telling you one way or the other, but vote for the policy that you think is best for you and your family, your job, your business. Those are the things you want to vote for, right? So that's why we go to the election. That's why every election is important, right? It's not just this election. Every election is important, because it has an impact on where our economy goes, net prosperity for individuals and households, and all those type of things. So we want to vote for those type of policies. I'll give you a good example. I have a lot of friends of mine that, they have children. Their children are much younger than mine. I started very late in life. But I have lots of friends with young children that, they need help with childcare, and they need help with daycare and those type of things, because their kids are young and they're still trying to work and make ends meet. And obviously in today's society, it requires more and more people with two income households to make ends meet. So they need access to healthcare. Well, one of the things that we had talked about previously is be careful voting for things like expanded child tax credits, child tax payments. Starting in 2020, if you look at the cost of childcare, when we started providing extra capital to individuals to pay for childcare, the idea was this is going to allow more people to come out of poverty. They'll be able to afford childcare for their kids. They can go to work. They can earn more money. Those type of things. That's great. The problem is that the child care providers also know that you're getting this money. And so the cost of child care has risen sharply over the last 4 years because of all this extra money that we give people. So again, if you're voting for, policy and one of those policies is, hey, I'm going to give you I'm going to give you a bunch of money for child care or health care or whatever it is, just realize that the other side of that equation is that all those costs are going to go up. So whatever you get money-wise is going to be worth less because the cost of those benefits go up. So again, this is why understanding policy, again, we don't want to vote for just what sounds good. Let's think about what those policies mean as we go to the polls today and you cast your ballots. So just the important things to think about, right? So let's talk about markets this morning. Here's what you need to know before the bell. We are just hanging on right now. Everybody's deep breath, kind of just waiting to see what's going to happen today as we get this election kind of through its process. Yesterday we came down, set right on the 50-day moving average. We've been just kind of holding that support level for the last couple of days. Futures this morning are looking to open up a bit, so we're going to try to hold that here this morning. Now again, there's no guarantee we're going to hold this today. But markets are trying to hold on to this level of support right now to get through this election day to see kind of what it's going to look like tomorrow. Markets are oversold on a short-term basis. And again, we're still on that sell signal, which again, that sell signal has just limited upside. The market really hasn't, while it seems like the market's really been struggling lately, we really haven't done a whole lot. In fact, we haven't done a whole lot now over the course of the last month. The market's just really kind of been trading very much sideways here just ahead of this election. But again, this little sell-off here we had over the last few days is not surprising. We had talked about the fact that markets would likely try to de-risk a bit going into the election. You had a very nice run, kind of coming up from those August lows. So, traders just taking some money off the table saying, hey, I'll wait to see how the outcome comes out, and then we'll go from there. But again, markets aren't doing anything very negative right now. Again, we've got this sell signal in place, and that's why this market has continued to kind of struggle here. And that's not really surprising, but we also in that process worked off a lot of that overbought condition that we had previously. So now this is actually a good thing, because we get through this election today with some type of reasonable outcome that we can kind of quantify fairly quickly, and hopefully we don't wind up in a contested election that stretches out until December. But if we kind of get through this election, this sell-off here now sets the market up to rally here into the rest of November and into December as we get ready to wrap up the year. Again, we have buybacks, performance chasing, window dressing, all that support now for stocks coming in, and this bit of a pullback and working off that overbought condition sets the table for that rally that we've kind of been expecting into year end. Again, doesn't mean it's not going to be a little bit bumpy. So again, kind of coming out of this election today, we got the Fed meeting tomorrow, CPI next week. Certainly some things in here to certainly kind of trip the market up, of course. And again, I would certainly kind of prepare for some volatility, particularly over the next few days. But as we start to look at, what the election outcome looks like, what those policies are going to look like going forward, and then we can start to factor in, okay, what sectors are going to benefit from whatever policies those are going to be. We can start to factor in kind of what expected economic activity is going to be, what will increase activity, what will impair activity. We'll know more about government spending, potential government spending. Of course, that helps economic growth. That's a factor. Government spending is part of the GDP equation. So again, we'll be able to start to factor some of this stuff in and start to make our bets on what sectors and what areas of the market should perform better under what the potential outcome is going to be. But we're not going to know that until the next few days. So again, just kind of be patient here. Just hedge for a little bit of volatility here, again, over the next day or two, no telling what's going to happen for sure. So, even if you didn't take any action earlier, we're talking last week about, raising some cash, trimming positions, etc. it's not too late to do that. Kind of reduce some risk in your portfolio for the next day or two. And then once we get past this, we can always kind of put money back to work. That's easy, right? You carry an umbrella when you expect it to rain, not try to find one after it started raining. So again, that's kind of the point we are here. That's what you need to know before the bell this morning. We'll come back, pick up with John Penn. Lots of stuff to go through today with him. So don't go away. More of the Real Investment Show coming right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
Medicare open enrollment is underway. If you need Medicare insurance coverage, RIA Advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So a little bit about, kind of, we've got an article on the website today. It's got some, kind of rules to follow for kind of preparing for election day, et cetera. So that's there for you on the website, realinvestmentadvice.com. Outside of that, though, it's really been very quiet over the last, really kind of couple of days in the market. Not anything really kind of going crazy. One of the big questions I'm getting right now is like, what's going on with bond yields? And that's just pre-election positioning is all it is. And you've got the Fed out on Wednesday, so bond traders are positioning. On Monday, there was a big downdraft in yields. And everybody's like, oh my gosh, what's going on with yields? And then yesterday you had a huge update with yields. So, our bonds, right? So again, it's just this kind of jockeying for position. And particularly we've got some bond auctions coming up next week. So dealers try to run rates down or run bond prices down, yields up going into the election so they can buy bonds cheaper. So again, there's not a lot going on, but a lot of this stuff you're seeing, the volatility in the market, the volatility in the bond market, is really just nothing more than hedge funds and pension funds and mutual funds all positioning for election. So be careful with narratives is always the case. There's lots of narratives running out. It's the debts, it's the deficits, it's this, it's that. No, it's just people positioning ahead of the election. That's it. And again, you have to remember that what happens with anything in the short term, whether it's stock prices, gold prices, bond prices, whatever it is, in the short term, all it is buyers and sellers moving price. That's what's happening. The long-term outcome, or the reason that you want to buy things when, and this is the hardest part about investing, is buying stuff when nobody else wants it, is that in the short term we get all wrapped up with, oh my gosh, this is terrible, these prices are going down. But that's when we should be buying stocks and should be buying bonds or buying gold when nobody wants it. And when everybody wants it, that's when you should be selling it, because that's when you're typically at the top of whatever's happening. But as investors, we always do the opposite, right? As investors, we always want to buy high and sell low, and that's just the function of psychology weighing in, because we don't like stuff when, we don't like to hang out with losers like we want to hang out with all the winners. But the problem is that the losers are the ones that ultimately wind up making you the most money at the time, right? Because again, there's certain things that are moving the markets temporarily that will fade. And it all comes back down at the end of the day to fundamentals and earnings and the things that drive, prices higher long term. But again, just be careful when everybody's herding into one asset like stocks. This is the best election year stock market of the 21st century. So everybody's long stocks. Everybody is long volatility right now, which is very interesting. You can't be long stocks and volatility at the same time, but we are. So again, there's risk there that next year we may have a very different environment. So just, you want to be kind of just careful. But that's been one of the questions I've been getting a lot over the last few days, John.
Well, I have too, and it's just amazing. I think as all of us as individuals, I know if there are certain things that you like to buy at the grocery store or what have you, when things go on sale, what do you typically do? You typically buy more.
Yeah.
I mean, like if I see the bags of coffee that I like at the grocery store, and if it's 2 for $1, guess what? I'm coming home with 2 bags of coffee that day. But what's amazing to me is if stocks are pulling down, oh my gosh, hey, they're on sale. I know so yields on longer duration bonds, their yields are up around 60 basis points. It's a fancy way, 60 basis points from mid-September. So yields are up. Guess what? Prices on longer duration bonds are down. If you've been looking for an opportunity maybe to add some long duration bond exposure to your portfolio, if you've been waiting for bonds to go on sale, hey, is this the rock bottom? We don't know, but are they a better value where they were before? Yeah. So maybe it's don't get into a panic or a frenzy around this. Maybe if you're looking to add some long duration bond exposure to your portfolio, compared to last September or mid-September, this is a better time, right? So you kind of have to think about it that way. If there's a car out there that you really want, and hey, if things go on sale, what do you typically do? You typically buy it. But it seems like with investors, with stocks and bonds, we do the exact opposite.
Mm-hmm. We do. Well, at the end, but this is just the emotions, right? We want to buy whatever's going up because it's going up, and oh look, that's already up 150%. They'll go up another 150%.
I'm all in.
Yeah. And that's just again, but this is why investors typically make mistakes over time. And the other challenge, of course, is there are some things that are down for a reason, and you don't want to own them, right? So it's also being able to sort out kind of the diamonds from the rubble. There are some companies you don't want to own. A good example of this is small cap stocks right now. Small cap stocks are having just a terrible time. And there's a reason why small cap stocks are having a terrible time, because they're not growing earnings. If you take a look at the S&P 600, which is the S&P small cap index, their earnings are declining, not growing. So if you take a look at the differential in earnings between small caps and large caps, you want to own large cap stocks versus small caps, because large caps are growing earnings, small caps are not. And that's a statement on the economy. Small cap stocks are very economically sensitive, so the economy's not growing at near the strength that a lot of the headline data says, and we've talked about that numerous times here on the show. But as an investor, it's important to be able to sort out, what drives the underlying fundamentals of stocks, bonds, gold, et cetera. And a lot of it is thesis. And some things are going up simply because price is going up. And so there's a thesis that says this is going up because of A, B, or C. But reality is for stocks, it comes down to earnings. For bonds, it comes down to raw fundamentals of economics and inflation and those type of things. So again, understanding what drives the long-term returns of something helps you be a better investor long-term.
Yeah, and I can see the argument for folks wanting to nibble or wanting to add a little bit more small cap exposure to the portfolio, because typically small cap stocks, they have a lot more debt. They just carry a lot more leverage.
Yep.
So if we're getting into an interest rate cycle, perhaps where rates are starting to come down, we got the election today, we got Fed meeting this week. So what's the Fed going to say and do around short-term interest rates? So if he's in more of a kind of rate cutting mode, if rates are still expected to come down, short-term interest rates, I can see the argument. Well, that's just got to be better for small cap stocks because they've got so much leverage. But at the end of the day, it's got to come down to earnings.
Yep. No, absolutely right. Got a question here in chat real quick. From Wham says, I live in Dubai. How can RI help me? We can't, unfortunately. Directly, we can't. Under SEC regulations, we can only manage money for U.S. citizens and residents that have domestic mailing addresses. And there are a few exceptions, expats, those type of things we can certainly manage money for. But we do have a website called simplevisor.com, which has all of our models on it, all of our research. So you can follow basically what we're doing to manage your own money by following our models and our investments, kind of our investment analysis that we produce at simplevisor.com. So you can go check that out for you as well. But that's why we built that platform, is that we have a lot of people from globally that watch the show, read our articles, etc. For some reason, we have a huge concentration of people in Brazil. I don't know why.
We do, actually.
We do. It's a very interesting thing. But we have a very large concentration of people in Brazil that read our work. So we built a platform for you. So you can go check that out. If you have any questions, just email me. Always happy to help you. So, it's interesting that, as we kind of go through this, look at on the other side of all this is going to be the impact of policy on the economy, right? So again, we're going to have to start making decisions about what policy is going to mean for economic activity. Are we going to have stronger economic growth, weaker economic growth, et cetera? I would suggest that given where valuations are currently and given the boost to earnings that we've had over the last several years because of an inordinate amount of monetary interventions, whether it was the Inflation Reduction Act, the CHIPS Act, stimulus checks to households, et cetera, that's not being renewed. So now again, this is all subject to change, because if the next policy, mix that comes in is a massive amount of deficit spending on all kinds of new projects, and particularly if they're infrastructure-related projects, that's going to have an impact on inflation. That's going to have an impact on economic growth, et cetera. So this will change. But assuming that we don't do any type of new massive spending bills that we did post-pandemic, because there's not a crisis right now to try to offset, that economic growth is going to slow back to normal trends. Earnings growth will slow back to normal trends, and profit margins will decline. So next year, I would not expect another 20% return year in the market like we've had for the last several years. Now, that doesn't mean that you're not going to make money, right? I mean, you could see an 8 to 10% year, which would get us back into more normal ranges, but that's going to feel, it's like, man, that sucks compared to...
Where's my 20 at?
Yeah,
Lance.
Where's my 15, 20 that I've been getting over the last couple of years, right? It's going to feel terrible because you're not making as much money, but, I would expect a slower rate of asset growth next year, particularly coming out of this year.
Yeah, and that's a question that we get a lot of when we're looking at financial forecasting and putting those financial plans together, is what sort of growth rate should we assume on a forward-looking basis when it comes down to our investable assets. It would be very easy for us to say, hey, well, if you can just take historical returns and use those on a forward-looking basis, but we don't know what the future holds. And will the market give us historical returns? Can we expect 20% a year next year?
Then the thing is that we've had, 14 years now of well above average market returns. And in fact, when we come back from break, I'll show you a table. Don't go away. More coming up.
Life is an illusion. Can't you see that love is everywhere? Step into the confusion. Can't you hear the sound that's in the air? It's rock and roll. 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 It's rock and roll.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Medicare open enrollment is underway. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
One thing that the consumer confidence measure measures, is that correct? If I say consumer confidence measures?
Measured squared.
How many measures can the consumer confidence measure? I don't know.
The Real Investment Show podcast.
Dr. Seuss.
The consumer confidence measures investor sentiment about stocks. That's the highest level on record.
Same show, your schedule.
It's amazing. And consumers are super confident about the stock market.
At realinvestmentadvice.com.
At the same time, they go, my life sucks economically, but the stock market, it's all good.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So I told you I wanted to show you a table. So this table is from Bank of America. And I think it's telling because, again, we get all wrapped up into these election days. And, this year's been, particular. And everybody's like, this is the election of a lifetime, et cetera. And they've said this every election for the last 4 years. So, or the last 4 elections. And it's always an important election, as we said. But, the problem is that there's a lot of rhetoric around elections in particular. It's like, oh my gosh, if this person gets elected, it's going to be, excuse me, it's going to be terrible for the economy. This is going to happen, that's going to happen, it's going to be awful. You don't want to be in stocks, you better be in this or that. And it just really hasn't worked out that way. Here's a table of every election. Excuse me, I choked myself up. This is a table of every election going back to Herbert Hoover. And what I want you to look at is the far right-hand side, which is, what happened over the next year. And there are certainly some red splotches, right? Not surprising. that there's some red splotches that, a president gets elected over the next year, the markets are down. That's not uncommon. But importantly, I want you to focus on basically 1988, starting with Ronald Reagan. Actually, 1980. Start with Ronald Reagan, 1980, and move forward. There's only been one down year in the last 10 elections. And there's a lot of reasons for that. But look at the returns of this: 13%, 21%, 11%, 31%, 6%, 4%, 24, 21, 38. This is because of all the monetary, in 1980, President Reagan deregulated the financial industry. And that led to an ability for consumers to take on a massive level of credit card debt and personal debt of all varieties. And that spurred economic activity, spurred economic growth, all debt driven. In fact, between 1980 and 2008, consumers took on about $11 trillion worth of debt. All got spent on the economy, right? So you had this massive boom of the economy. And so through 2008, you had the consumers really driving the economy. Now, since 2008, the percentage of consumption by consumers in the economy has not changed. It's been flat. So what's been driving the market since then? It's really not been economic growth. Economic growth was chugging along at about 2% from 2008 till present. Hasn't really done much more than that. So what's been driving the market? Well, that was $47 trillion worth of government interventions. HAMP, HARP, TARP, QE, etc. So that's why you're having these outsized returns, regardless of who's elected president. You can go through that list right there and go, man, I hated that guy. I like that guy. I hated that guy. It doesn't really matter. Blue, red, pink, purple doesn't matter. The market does fine because of everything that's going on. The financialization of the financial markets in specifically. And the fact that in the U.S., we're now 60% of the global market cap. So we're just attracting inflows from everywhere in the world that are coming into U.S. stocks. And then you've got the function of passive indexing. And in fact, we ran out of 3 letters for ETFs. We've done so many ETFs now. We ran out of 3 letters. So now we're having a surge of 4-letter ETFs because they ran out of 3-letter combinations. So this is what's happening in the financial market. So again, we want to worry, as humans, we always want to worry about something. And I get that, right? We always want to worry about something. This is going to be terrible. That's going to be terrible. This is going to happen. But just try to focus on the longer term, outlook. And again, there's certainly risk. And right now, I think we've got about 6 years to make as much money as we can. Because in about another 6 years, when we get closer to 2030, we will have run a normal historical secular bull market cycle in time-wise. Now, doesn't mean exactly 6 years. Could be 7, could be 8. But we're running the longer length of a secular bull market. So in about another 6, you got about 6 years to make all the money you can, and then we're probably going to have another decade or so of very, very low returns for whatever reason. But it'll be something that we kind of saw from 2000 through 2008 or 2013, actually, where markets just kind of went nowhere for 20 years.
There's a lot of volatility in between the bookends.
Yeah, and a lot of volatility. But again, this is the same cycle that's repeated going back to 1900. You actually go back to 1871. We have had just there is a very steady cycle of secular bull and secular bear markets, and they're all about the same length in time. So 6 years, we're going to make a bunch of money, and then we're going to hunker down for 10, 15.
Are we getting in the bunker?
No, not in the bunker. Just you have to be a lot more selective.
Yes.
About where you manage money. So anyway, just again, the whole purpose of this is just to, keep focused on the long term. That's where we've really got to, these events will come and go. And then the events will drive markets short term. You're going to have a lot of volatility. And then we'll be back to focusing on the Fed. We'll be back to focusing on economics, interest rates, those type of things.
And along the way, hey, the media is great. The news is out there. It's just financial overload, right? Try not to let the media just kind of sway you one way or the other or make these knee-jerk reactions, because especially they're so good at playing on your emotions. And that's what they want. They want you to tune in, and they want your clicks, and they want to be able to sell you their advertising or what's kind of really behind the message. So try to kind of separate yourself. It's always good to be keeping up with current events and what's going on out there in the world, but don't let that be your sole decision maker on how you're positioning your wealth moving forward either, right? Because it's as the folks behind the screens and the media and all the advertisements out there, they know that we are emotional beings, and they know how to pull in our strings. And you have to be able to take a step back and really separate yourself from that. And if you find that you can't do that on your own, if it's too emotional, then you need to work with somebody. Find a fiduciary that you can work with that can be an objective partner that can kind of cut through that noise and keep you on track.
There you go. So, all right, I think we've tortured that horse enough. So what else you got today, John?
Well, I think it's, as of late, it's all been around the election and who's going to be the president. And I think the folks that I've been visiting with over the last week, I think they're expecting this to be contested, even though at the end of the day, they just want an outcome, whether if it's Trump that's in office or if it's Harris that's in office. They just want an outcome so they can move on. But more and more folks, I think they're paying even closer attention to who's going to control the House and the Senate, right? It's not necessarily, who's kind of quote unquote in charge at the White House. It's, are we going to have one party or two parties, or is there going to be somewhat of a divided Congress? And I think that's what folks are really wanting, is more a divided Congress where, we're in gridlock, where maybe one set of policies can't overrun the other, right?
Well, that's something we actually addressed in today's article on the website.
Yeah.
Brent, I've got a chart here. So it's very, what you're saying is extremely important.
Yeah.
Is that it really has nothing to do with the president. What it has to do with more than anything else is really the control of the House and the Senate. Just 1 second, I lost my picture because Brent's too slow.
There's a lot of love in here.
Keep changing it. It changed on its own. I forgot to click damn it. Let's try that again. It's got a pause button, and I forgot to hit the pause button. Try that. That should stay there. So what this is this is a table of every possible combination. So what you'll see in row one is a good example. So in row one, you get the White House is controlled by one party. Congress is controlled by one party. So you have, in this particular case, so it's saying Democrats control the House and the Senate and the presidency. And then you scroll to the right, and that gives you the average kind of return over the next kind of the average 3-month return relative to all the periods that are observed going back in history. So they look at every period where Democrats controlled basically sweep of the White House, Congress, and Senate. And then you look at when it's divided. So you have a Democratic controlled presidency, but Congress is controlled by Republicans. And then you have the outcome where either a Democrat or Republican controls the presidency, and it's split on the other end. And what you notice is that the best returns come with a divided outcome. In other words, gridlock. So the best outcome is typically when you have a president and you have a split, House or Senate, or you have a Democratic president or Republican House, right? Those type of things. That's when you typically get your best rate of return out of stocks, because again, and it makes sense, right? Because the one thing that the markets can't really compensate for is changing policies. And so if somebody gets elected and then they pass some radical policy one way or the other, then markets have to really try to adjust all at once for that, and that's difficult. But if there's gridlock, markets like that, because they go, nothing's really going to happen, so I can pretty much just focus on earnings and what I think the economy is going to be, and nothing else is going to really impact that. So that's going to work out well.
Yeah, kind of invest on autopilot for almost, right? Just kind of slow and no major shocks, no major, maybe we'll have more of a complacent market. Who knows, right?
Right. And again, it just really kind of to make sense, kind of overall. But again, this is part of what I think. Again, I agree with you that once we may not know who the president is until December, whether it's contested or not. And,
right.
We have one party that wins the popular vote, but the other party wins the electoral college, and then it all goes into contest for a couple months. We will have a pretty good idea by really late tomorrow about outcomes for House and Senate. We'll have a pretty good idea of that. And I think if that turns out to be split, I think the markets are going to like that, and we'll get a rally into the end of the week. So, all right. Come back, wrap up the show. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
Medicare open enrollment is underway. If you need Medicare insurance coverage, RIA Advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partner to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
You're listening to The Real Investment Show.
All right, switching gears here a little bit as we get ready to wrap up the show today. I think we've, look, bottom line with the elections is just don't worry about it. This too shall pass, as my mother used to say on a regular basis, because I was generally in trouble with Dad, and she's like, this will pass.
Just give it a week, son.
Just give it a week. He'll forget about it. But yeah, this will pass, and we will be back to focusing on the Fed and interest rates and the economy and those type of things. And the Fed is going to probably cut 25 basis points tomorrow, so I would expect that. The data, the recent employment data was, yes, it was a terrible employment report, and the problem with it is that you had the Boeing strike, you had 2 hurricanes that just really skewed a lot of that employment data. So we've got to really, kind of set that one aside for the moment and wait for the next employment report to come out to see, now that Boeing workers have gone back to work and now that people are getting back to work in North Carolina and Florida and kind of going back to some normalcy, to see what that employment looks like. Now, we'll tell you there's some interesting data coming out on the retail front, retail jobs, that we are moving into the strongest shopping periods of the year. Halloween's number 2, Christmas number 1. Valentine's Day is probably way up there, at least with my wife. So, I got off. Did I tell you I got off good this year for Christmas?
How'd you swing that?
How did I swing that?
Yeah. How,
she told me what she wants for Christmas. I'm like, I am all in on this. A wet dry vac for our back porch.
Wow.
That's what she wants.
That is fantastic.
I know. I was like, yes, I can do this. So I'm getting off good this year. Anyway, but this is the strongest shopping period of the year. She's a geek. I love her to death, but she is.
Hey, can I throw in some floor mats too for
Yeah.
the car?
You know what?
Some WeatherTech floor mats. I need some of those.
Dude, let me tell you, she would be thrilled with that.
That's fantastic.
She is just that way. Anyway, that's why I love her to death. She's just awesome. But anyway, so retail hiring has been very slow, which is kind of interesting. You would expect to see right now that retailers were really kind of ramping up hiring for the Thanksgiving, Black Friday sales, which started like 6 months ago. You would expect to see a big ramp up in hiring, and we're not seeing it yet. It doesn't mean it's not going to happen, but we have, normally by now, this is the beginning of November. Black Friday sales, used to be when I was growing up, it actually was only on Friday after, shopping was closed on Thursday and you went to, Black Friday was the day and you had sales for Black Friday. That now starts on the Monday before Thanksgiving and people are even open on Thanksgiving now. So you just shop right through. So we take a week's worth of sales and we cram them all in. We say, oh, it's Black Friday sales, even though it's a week's worth of data that is comprising one day. But you would expect to see people getting hired for that. We're not seeing that in droves yet. We're not seeing the normal seasonal hiring that we would see in retail. Now, I don't know if that just means that, maybe retailers are all stocked up with employees, or if they're being more cautious about it, or if this is an expectation that sales may be weaker than what a lot of the headlines are suggesting.
I look at, the holiday shopping season this year just for me, and there's really nothing I really need. It's like I feel like no urge that I really need to go out there and really get anything really. And I don't know if that's kind of it does seem like the more folks that I'm visiting with, they kind of feel very, how can I say, comfortable with kind of what they have. The folks that I've been visiting with too, they're not planning on making huge ticket purchases for the holiday season this year. At least that's what I'm getting so far. Now it's early where, of course, all the stores have all the Christmas stuff out. It's not even Thanksgiving yet. I'm starting to see, holiday decor all around our neighborhood yet. I'm like, please give Thanksgiving the respects that it deserves at least. But
we have turkeys on our front porch. And in fact, it was crisis yesterday, turkey down. There was a big windstorm, blew our turkeys over. So we had turkey down in the front yard, so we had to go rescue them.
Do you have Santa hats on your turkeys?
Nope.
Okay, good.
Nope.
That's all right.
We are Thanksgiving until Thanksgiving.
That's
and then
the way we are.
Day after Thanksgiving, and trust me, my wife already has it all sorted out. We have a room in our new house that's all her decorations, and she's already got it segregated out. I'm talking about Friday morning after Thanksgiving.
It's on.
Turkeys go back in the box, and it is on for Christmas. So it is going to be jingle toes through the house for
jingle toes.
And she's being really good this year because the Hallmark has started. It's the Hallmark channel. I will say that correctly. Hallmark channel started running Christmas shows the day before Halloween.
Yikes!
So she's been good though. She's stayed off of it.
Yeah,
so far.
Yeah.
But come Black Friday,
it's on.
It's gonna I'm just gonna go. Thank goodness I've got my office now squared away. I'll be in my office watching Die Hard for Christmas. So that's the only true Christmas movie is Die Hard.
So many great one-liners I could quote right now, but we're on the air, so I can't. But it just seems like a lot of the folks that I've been talking with lately, they're not making huge plans for making big expenditures. Now, they want to make some gifts, some monetary gifts to kids, grandkids, to family. They want their family to kind of enjoy the financial assets that they have now, so they're planning on making some gifts by the end of the year. But at least from a quote-unquote shopping standpoint, haven't had a lot of those conversations as of late. We'll see. It's still kind of early, I guess.
Yeah, it is early.
Yeah.
And we'll see. But again, there's a couple of comments like, retail hiring's down because people don't shop at retail stores anymore. Yeah, there's been a slowing trend. Your point is correct. There has been a slowing trend of hiring in retail because of the transition from, physical retail stores versus online. Couldn't think of the word.
Yeah.
Alzheimer's setting in. But we're talking about a dramatic drop in retail this year. It is an abnormally slow hiring season so far for retail. Again, that is just one survey, right? Could mean nothing. Could be just a rush of hiring in the next week or two. Maybe everybody's kind of waiting to see post-election and try to figure it out from there. But I mean, this is a very, very big differential that is statistically an abnormality. So it's more than just kind of the physical, online, retail, closing, that type of thing. So it's more than that.
So you're not you're not going to go wait in a tent out in the parking lot of your favorite store.
I have never done that.
I don't get it.
I've never done that in my life.
I mean, it's like tradition for, hey, nothing against it, not knocking this, but I know there's traditions out there where families, like, they get together and they camp out waiting for the doors to open to get in there and before everybody else. There's nothing out there that I could think of where I'm like, yeah, I think I'm just going to go hang out in a parking lot a little bit and be the first one in the door for this thing. Just never crosses my mind.
Well, see, that's the problem with me. So for my wife dealing with me, I don't really want much.
That's it for me.
I don't need much, and most everything that I spend is mostly on her, and I have suits that are like 5 years old, and I don't buy new suits until they literally kind of fall apart. And same thing with vehicles or anything else. So there's just not much that I want. So I'm really hard to buy for.
Yeah.
Because most everything you buy me, I really don't want. So she's kind of gotten around to that, but there's not any reason to go camp out at a store.
Yeah,
right? Because there's nothing I want bad enough that I have to be there that early.
Or to put myself in like harm's way for that thing. I'm just like, have you seen how these crowds act? I'm like, really, folks? Come on.
Yeah.
There'll be more on the shelves tomorrow.
Yeah.
Just wait.
But not at the same price.
Yeah, that's right. Yeah.
And you can't say that you got it on Black Friday.
That's right. That's
true. On the Monday before Friday. But anyway, that's the way it all works. All right, just getting ready to wrap up the show. Earnings out. Palantir actually reported earnings last night. They had just a fantastic outlook. That stock is going to be up about 14% today. This is one of the I wish I would have bought stocks. A while back, I didn't have room for it in the portfolio, but this is one that I've been wanting to own for a long time, and they just kind of keep running up. They're up 100, and they'll be up 100, almost 200% this year so far. They've just had a fantastic return, but this is part of the AI trade as well. But they are just, again, we keep hearing a lot of comments from people like, "Oh, the AI trade's fading out." No, it's not. It's just really a lot of this is just getting started and is going to continue to grow. So again, just. Palantir is going to be one of the big green spots in the markets today. Today, we've got Apollo Management, Devon Energy is reporting today, Ferrari, which is symbol race. Always like watching Ferrari stock, just see if the high end is still buying more Ferraris.
Have they been lately?
Yeah,
are they?
Okay, yeah. SuperMicro Computer, which I think is the most fascinating, they announced today that stock was on this massive AI tear about a year ago and was just shooting straight up. And this was a small cap 600 stock. They build computers and it got linked to the AI trade. And so this stock went running up. And this is just a great story about buying stocks to get added to the S&P 500. The S&P 500 index is just as bad about adding stocks at a peak because oh man, this thing is just taking off and we've got to have it in the index. And so they moved it from the S&P 600 to the S&P 500. And they swapped out another company for it. Well, which was Deckers, which was outdoor stuff. And Deckers has done fine. Microcomputer, SuperMicro, is now back into being a small cap stock. It has lost like 70% of its value. It reports earnings today. It'll be interesting to watch. There's all kinds of allegations about fraud in their accounting. So it'll be interesting to see what happens with that stock today. But talk about bad timing. Oh, by the way, have to also tell you this real quick. NVIDIA is swapping out Intel in the Dow Jones. So Intel's been a disaster. So not surprising, Dow Jones, also run by S&P. They're going to swap out a high flyer for a low flyer. So we'll see what happens. That may be an omen for NVIDIA. We'll see what happens. All right. Y'all have a great day. Be sure and go out and vote. And we'll see you back here tomorrow on Wednesday with Danny Ratliff.